Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. As we say over and over again, and it gets proven one more time today, the charts tell the truth. You read them correctly, you know where this market is going. You may not know how far it's going or how long it will last, but it tells you when the pivot points are coming, and we again saw that yesterday into today, leading to the monstrous move up in the markets. Today's date, Tuesday, March 11th, 2008. And what a move we had today, folks. I am, in awe of the technicals one more time. You guys know in probably the last 3 to 4 videos, we've been saying there's a big move setting up. And we said that again in yesterday's video. And we continue to say, listen, the catalyst, it doesn't matter what the catalyst is going to be. There's going to be a catalyst. It may be the Fed, we said. It may be the government bailing things out. And sure enough, the Fed comes out today and does their little dance. It wasn't an interest rate cut, which is even better for the markets. And I think the markets loved that. And I'm going to go into the reasons why it was even better. All right? But in any case, no qualms about it. The market just ripped higher. It was a short squeeze. We haven't seen a short squeeze like this in the markets in, I don't know, months. I mean, this is like harkening back until mid last year when the markets were just screaming higher. No relentless, giving anything up to any shorts. The Nasdaq moved up 86.5 points or 4%. The Dow was up 417 or 3.55%. And the S&P moved up 47 and change or 3.71%. So now I just want to get into some odds and ends about what happened today. Now, you guys just heard me say a minute ago, I think this was a better thing, and the markets took it to be much better than an interest rate cut, and I'm going to explain why. Now, the Fed came out today and basically, said they're gonna take care of some of this debt. Now, that's not really what they were saying. They were saying that they're making available short-term funds for these stressed out banks and financial institutions. It's a long story short, it was a big deal. Very, very big deal. Now, why would this be better than a rate cut? Well, pure and simple, it has to do with the dollar. All right? The Fed has continued to cut interest rates, and the dollar has continued to collapse. That simple. Okay? So, if they're going to continue to cut interest rates, the dollar is going to continue to go down. Commodities like oil and gold are going to continue to run up. Inflation is going to be roaring straight ahead, and it's just not a good situation. So the Fed, and I even said this in another video, I specifically said this in the last few videos, the Fed needs to find another way to handle this, that it's not going to crush the dollar. And it looks like the Fed has found that way, or at least begun to find that way. And I remember saying this in other videos as well, is that the Fed needs to find a second angle. The Fed had interest rates, great. Now they need to find the second angle. They look to have found the second angle. So you guys can see, when the news was announced this morning around 8:20 in the morning, 8:25, right around that 8:30 time frame, a blast off of massive proportions happened here. All right? You can see the futures here. We basically went from 12, I don't know, it's hard to even, comprehend here, 1280-ish it looks like, right around here. Yeah, 1282, all the way to, in three candles, 3 10-minute candles. And again, we're looking at the intraday ES chart here, the ES S&P Minis March '08 contract. You can see it went basically 1310 to 13, or so, 1315, a little under 1310 it looks like, right around here at 1309. Now, right off of that, you had a massive buy program, and that kicked off. And we can all see that here. Now, what happened here was even more beautiful, because all the amateur shorts out there, now, my partners and I at InTheMoneyStocks.com have continued to say, listen, we're going to have a squeeze of massive proportions. Way too many shorts out there. I mentioned this in yesterday's video. The put-call ratio yesterday was approaching 1.5. It's a dead giveaway. We saw pivot points in the various charts for yesterday. Sure enough, it set it up for the massive move today to the upside. I could go into proprietary stuff. I just can't, unfortunately. You guys have to come to the webinars. By the way, we're having one on April 5th and again on April 15th, 16th, I believe, or 16th, 17th. It's on the website under webinars. You guys can sign up there. We teach this technical stuff, by the way, guys. We're not going to give up our trade secrets, which basically make us unique, but we'll give up everything else that makes you be able to read markets almost as good as we can, if not as good. And we may even give up some of those trade secrets. We'll have to sit down and talk about it. We sometimes give up 1 or 2 of them, which makes it worthwhile. We almost always give up 1 or 2. So come join those webinars. They're on InTheMoneyStocks.com under webinars, and the dates are listed there. One's a one-day event on Saturday. The other one's a Wednesday, Thursday. I believe it's 16th, 17th of April. In any case, long story short, you have all the amateurs right here, and they're all seeing the market kind of slowly dribble down. And they're all saying to themselves, wow, this market's, watch it give up all the gains today. Watch it go negative. Sure, let's jump on short. So all the shorts are piling on here, and they're thinking, oh, this is the sweetest short in the world, right? Because we're just, the market every day rolls over. And anytime it gaps up, it rolls over. Sure enough, it looks like it's going to do that. Unfortunately, or fortunately, us at InTheMoneyStocks.com, we alerted everyone in the chat room, this isn't over. People wanted to go short in the chat room here. We said, guys, don't do this. This is an explosive market. There are way too many shorts expecting this. Do not do this. Sure enough, before you know it, the short squeeze starts. And look at this massive move. All right, you're talking about just a constant buy, slow squeeze. Actually, it wasn't really slow, to be honest. The markets continued to move up. They just never stopped. So here you can see just a constant squeeze. And this is a beautiful short squeeze example. Those of you guys that want to know about short squeezes, this is it. It doesn't matter when the moving averages are. It doesn't matter anything. All it matters is that there's shorts covering, and when shorts covering, it's forced buying. So not only do you have natural buying occurring, but you also have secondary short covering, which is buying, and it just continues to push the market up. So every time someone shorts into this market, let's say you went short right here, and you were up a little bit, well, that looked good at first. You got a 2-bar pullback here, a very tiny pullback, but then the next candle, all of a sudden shorts, it would start to move up, and the more shorts would have to cover, and it starts to cause you to have to cover, you have to buy back to cover those shares, and it just continues to squeeze it up. Unbelievable market. You have to be thrilled with this. I mean, we called it in the previous couple videos that this was coming. Sure enough, it came to fruition today, and this is a major reversal in this market. Now, we're not talking about a major, we're not talking about we're going back to the highs from last year. No, we're not saying that. What we are saying here is that the SPX, the S&P here, closed above a key resistance level. Now, what do we always say about markets when they have a major move? We always say, all right, expect a pause or a small move either way. So a small move positive or negative, or a pause, essentially, after a move like this is what you usually expect. And then you can watch for consolidation pattern before the next move higher. Today on the upside, we definitely made a bullish stand. And usually off of that, you're going to have a small pause or pullback over the next few days, possibly the next week even. And what you then have is a secondary move of buy program or move up. So what we're going to be looking for in the next few days is a pause or a sideways channel or some sort of pullback that will give us a nice candle, angle to buy off of, which should give us a nice run up again. We'll watch for key breakdown lines as always, because we are in a bear market, and there's no denying that, folks. So you have to expect that, all right? So as long as you maintain a stop, you have to look to the long side at this point for another move up, which we do expect, and we've been expecting it now for a couple days or so. All right, so keep that in mind, guys. Let's look at the daily chart. There's not much more to say on the intraday. The daily NASDAQ, look at the reversal. And this is key, guys. Yesterday, remember, I said how we took out January lows on the NASDAQ, right? But the key here, and I'm looking at the weekly, actually, so let's take off that weekly for now. We want to go back to the daily. But again, how I mentioned how we took out that January low, but we have to confirm it. You guys know this, right, by now, is that we had to move down finally. Yesterday was a down where we closed below January lows, but then you didn't get any confirmation whatsoever. We didn't even tick below that at all down there. In fact, we gapped up super high, and that's a major reversal off a pretty ugly candle yesterday. So again, now you're all of a sudden, as I mentioned yesterday, you're looking on the upside for this 20 moving average to be touched. That'll be the first area of resistance after we consolidate for a couple days. I expect to move to that level. Once we hit that level, we'll have to start looking to see if there's more upside potential in this market. Now let's take a look at the SPY, because the SPY is even greater here. All right, you guys can just see the reversal here in this market. I mean, tremendous. And essentially what you got, guys, and I know a lot of people are saying, well, January lows weren't necessarily tested, or where's the double bottom? Well, that was a double bottom yesterday, and it's very important to understand that, is that a double bottom doesn't have to, by any stretch, be at a level of the exact same double bottom. A double bottom is a general range, close to the same lows from before. So you have to understand that nothing's exact science. It's like a moving average. A moving average is a compilation of closing points or so forth that equal a moving average. And there's nothing that states that a stock has to move up and exactly touch that pinpoint move. It can be in that range or close to that range, and that's what we got here. You can see right here, we draw a line from the closing or the opening lows right to here, and you basically touched it yesterday, giving us that double bottom bounce. I'm a firm believer in double bottoms, moving average analysis. All the technical chart patterns we preach can be found again in the webinar. We're going to go over all this. Come sign up. I can't strongly encourage it enough. It's just going to be one of the best opportunities for you to learn the technicals, which will then lead you to become a much better trader or investor. All right? Can't stress that enough. All right, guys? So in any case, enough of the daily, enough of the intraday. Tremendous move up here. I just want to lastly talk about technology. It was a massive rally in the financials today. Google even rallied in the technology sector to up 26. Google had been overly punished, and we even mentioned this, is that Google, you knew, was going to get a bounce. Look at this fall. Are you kidding me? Google, one of the biggest plays, one of the strongest stocks of all last year. You knew this was going to get a bounce sooner or later, right in this range. Sure enough, we talked about this in the chat room, as well as the solar plays getting a bounce. Look at the solar plays today. SOLF, just a tremendous move up. Long story short, guys, the video's over. Come join the Swing Trade Alerts. We had 3 winners today, go up big time. Everything else, wonderful. Have a wonderful day. Take care.